All right, everybody. April 9th, Thursday, 13th day, coronavirus pandemic. The United States right now, well, we know the United States has the most infections in the world. I think it's around 500,000. It might be more. But New York State, that's what I wanted to say. I am coming to you here from New York City, which is the epicenter. But New York State has more coronavirus infected people than any country in the entire world. And I think in New York City we probably have 2/3 of those infections in the entire state. We have it right here in New York City. So, but I'm trying to come to you with some positive news today. Little tiny positive news. It's not big news, maybe little tiny positive news, a glimmer of hope. It looks like the fiscal flows are starting to pick up. First of all, I've been telling you about unemployment benefits. They rose yesterday $1 billion in one day. The day before that it was like 950 million or 900 and something million. The day before that it was 800. So they're going up by $1 billion a day. The unemployment insurance benefits are going out by $1 billion a day, and that's probably going to accelerate. But that's still small. Like I said yesterday, you need a lot more than that. But there was a significant increase yesterday in the flows, and that's maybe because some of those stimulus checks or whatever, the stimulus deposits, they might be starting to be distributed. I saw a very big increase, a $4.5 billion increase in IRS tax refunds, and I think that's how they are being sent out, or at least that's how they're being accounted for in the daily Treasury statement. So we are now up, it looks like a little bit of an acceleration in the flows. I still need a few more days to make sure this is happening, to confirm this. And even if it is happening, the question still remains. And I think it's a question that maybe we all can answer. Will this be sufficient? Will this be enough? At least to, sustain us where we are and not make it worse. But the fiscal flows look like they are finally starting to pick up. The unemployment benefits definitely, by the way, the thing was up another 6.6 million today, new initial claims for unemployment benefits. So the flows look like they are picking up. That is very important. Another aspect is, and this goes back to January, it goes back to December when I was starting to become cautious. Remember, all last year in 2019, I said when it came to the market, when it came to the economy, buy every dip, fade the pessimists. Remember we had, it was all the concerns about the inverted yield curve and the trade war. And, then we had the repo situation where they were talking about tightness in the overnight lending market. I said, look, you got to fade that. That was all good. That was all good advice. The market ended up rallying to all new time highs. And January came. I said, things are starting to look a little questionable here. I was talking about the flows. Go back and watch my videos in January when I was talking about the flow. The tax flows were exceeding the spending flows. I went through all this discussion and explanation with you guys. I said it was like, think of a swimming pool. When there's water draining out, there's a crack in the pool. That's the tax flows sucking the water out. And the water coming in is not flowing in as fast as the leak. What happens? The level goes down, the level being the economy, the growth pace. So I was already, and that was before the you-know-what hit the fan with regard to the pandemic. I was saying, everybody, remember we came into January, and I talked about this too. All of Wall Street, all the big shots on Wall Street, oh, don't sell. This is the absolute wrong time to sell. Stocks are going to go up. 2020 is going to be... I'm like, got to be careful here. And this was purely on the fiscal flow. So now, anyway, I'm just pointing this out. Gold. I spoke about this a few days ago, maybe it was last week, I don't know. We bought back in a small, remember I made that video a couple of days ago about the market being inverted, that we have a backwardation in the gold market where spot prices or the most nearby futures contract is trading at a premium to the deferred. This you know, it is a signal to the market to bring supply in. I said, you know, normally longer term, that is a signal for a market going lower. But I did buy, I mentioned the other day that when we had that pullback to 1677, bought a little bit there. Today we shot up to 1750. So gold is still being driven by, I think it's mostly speculative demand. However, on every pullback so far, we have seen commercial buying of gold. So there still is that tightness in supply, and it is, I guess, a good sign if you're a gold bull that every time we get a pullback in prices, commercials in the gold market, those are entities, you know, those are gold producers, those are refiners. They are getting in there and they are buying. That is a good sign, all right? So we bought 16, where did I come up with the 1677? That was a level where they were buying a couple of weeks ago. So I looked at that level, I said, hey, look, if they're finding value at that level, I feel like it's okay to buy at that level. So we shot up to 1750. I think we ended up somewhere around 1735. The dollar, starting to pull back again. I happen to think if you're not in the gold rally, if you haven't bought in at a good level, I think it's okay to short the dollar because ultimately the dollar will react to this perception of what the Fed is doing and you know, how the gold rally. I think you're going to see that also manifest in a weaker dollar. As you know, I've been bearish on the dollar for a long time. It's hovering around this 9,900 level. And if you really look at what the dollar has done within the context of this massive, unprecedented, historic dollar shortage, I mean, if you look at that historically, at the move in the dollar, it has been tiny, tiny. Now this dollar shortage has brought the Fed in on a scale that we have not seen since 2008. As a matter of fact, you know, you can actually look at what the Fed is doing with respect to its Forex swap lines over the last couple of weeks, and the amount of swaps that the Fed has engaged in with other central banks exceeds what we saw in 2008, at least on a weekly basis. The total outstanding amount is not there yet. I mean, we got up to almost 600 billion in 2008, but I think right now we're up around 348 billion or something like that. We get the new figures. Actually, tonight I'm going to be able to look at the new figures. So, oh, one last thing I want to talk about. It looks like there's an agreement, OPEC looking to cut production by 10 million barrels a day in May and June, I believe. The market initially ran up on that, then it sold off pretty sharply. I think crude ended down about 7.5%, but I'd be buying that dip. I'd be buying that dip. I do not think the stock market rally is over yet. I'd be buying that dip in crude, and I'm a cautious bull on gold, and I'm bearish on the dollar. Anyway, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See everybody tomorrow, and stay well.